there's gonna be a lot of good information today. So I want to thank people as they start to roll in. Today is going to be a time for us to really get the inside scoop on what's going on with the SBA loans, and from somebody who is in the trenches, right? If you want to talk to somebody about what it's like to go fight in Afghanistan, you go talk to my son, right? He can give you the real world, what it's like to be there. And I think if you're talking about the SBA loan, or you're talking about small business lending, the PPP, the EIDL, blah, 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 all this stuff. We have the guy with us today who is fighting. He's armed, he's dangerous. He may have even gotten knocked down a couple of times because he's working day and night. Mr. Mike Rizzo, 5 Star Bank, part of the executive leadership group over there at 5 Star. And to help moderate today, my main man, Rick Spencer, Vice President of Haney Biz. I also see Alyssa White, one of our top-notch CPAs here on the Haney Biz team. So we have a group of people that is going to grill the crap out of Mike Rizzo. And you guys on the line, you're going to be able to put your questions in. If there's details you want to know about eligibility, details you want to know about what bank should I go to, details you want to know about how fast can I get my money, and all the different scenarios that are probably going through our head. Today's the day. Let's exhaust the questions. Let's get it from Mike, a man who's been he's weathered this crisis as well as anybody. So with that said, Rick, anything else you want to say before we start diving into questions with Mike?
Yeah, I just want to thank all the attendees. We've had great support from the community and our partners, including 5 Star Bank. We've been updating our crisis page, haneybiz.com/crisis. So we have all of our webinars recorded. Previous one with Mike that he was able to do last week. It seems like years ago, but it was only last week on Monday about this same topic. We have our daily Haney Biz huddles. And so we had our first one. We actually had 2. So today we'll have our 3rd one. And so those have been great for the community to get together, talk about the news of the day so that everyone's getting information instead of feeling overwhelmed, and being able to connect and not feel alone, right? So we're saying, no entrepreneur left behind. And so that community effort's working really well. We've also launched our accounting and finance crisis support plan. And so, we've had some great results already with companies, helping them with their financial planning. We were just talking to another company today, helping them with a merger they're considering in this time. So there's a lot of options out there, but you need great advice. And so our team has stepped up, and with this crisis support plan, you have some really great packages you can choose from. We've had a lot of requests about how people can help Haney Biz. So we've launched a referral opportunity. So if you're interested in referring people to Haney Biz for this advice and these services, please reach out to me, rick@haneybiz.com, and we can get you set up with your own referral code, whether you're an organization or an individual that wants to leverage your network. So thanks for everyone that's reached out to offer their support for Haney Biz. So yeah, without further ado, I think there's 2 acronyms that will be permanently engraved in our minds go forward. One is COVID and the other is PPP. And Mike was just talking about some of the nightmares he's had recently about such subjects. But Mike, can you give us, kind of the state of affairs today, 2 o'clock on Wednesday, April 8th?
Yeah, sure. I want to when Mark said that you talked to your son about going into Afghanistan to understand what that's like. We've made some comparisons here in the bank in that way. It's like going to war. We have all been working so hard together. And, it's like we're fighting a war. And I think it's fun. It's interesting because internally we've created such stronger bonds, even though we're all working remotely. But we all have a common goal, and we all are very singularly focused. And that is to get these monies out to businesses. So it's kind of a parallel, I think, in a lot of ways, because, it's something that nobody will forget for the rest of their lives about how we went through this process and how hard we worked to make it happen. But at any rate, so thank you for mentioning that. The first thing I wanted to say is that there's a lot, and I said it last time on the show, there's a lot of misinformation out there, and there's a lot of, I think, heightened sense of urgency that doesn't necessarily need to be there. And I would just urge everyone to take a step back, relax, know that banks are working like crazy to try and make this happen. I've been getting every day, every moment as we speak, as I sit here today, I'm getting text messages from clients who are just wanting to know what the status is, and it's what the status is. And so it's, everybody's bombarding me, and that's happening to everyone else within my bank and every other bank. So, I can't reply to all of that, right? So I just need to get my job done and focus on that. And so I think if and I want to talk a little bit about where we stand and help you understand that it's okay just to take a step back and relax, because the $350 million, billion dollars, pardon me, is out there to be distributed through the banking system to businesses, and that's what we're all wanting a piece of. That is most likely, and I'm like 99% sure, is going to be increased by at least $200 billion. And that should happen in the next day or two. So keep your eye out for that. So that's going to increase the allocation of money to banks to allow them to make these loans. So, everybody has this mind that they're racing for this pot of gold, right? And that pot of gold is getting bigger and bigger, and it's going to be there. So just relax, take it easy. It's going to be there. The bigger issue, I think, is making sure that you're at a bank that is offering PPP loans. And it is true that most banks are only servicing their own clients, with some exceptions, but by and large, their own clients. And it is also true that some banks have kind of hit their capacity levels to service those existing clients and new clients. So, and we're probably one of those banks ourselves, where at the end of today, we're going to kind of hit the pause button and say, okay, we got to take a breath, because we've taken in 800 applications. We have $200 plus million of loans that are out there right now, and that we need to get through those loans. And that's an internal process of getting through all of that. And when the additional allocation of money comes, then more than likely we could then reopen the spigot, so to speak. But it'll be there. It's just, you got to give us some time to get it through that process. And the other thing that's very, very important is probably more so than anything, is the way this thing is set up. The money that goes out to businesses is actually from the bank. So it's a loan. It's not the $350 billion you hear about on the media. It's a loan from the bank, and then after there's a duration of time, that loan is then forgiven by the U.S. government, which means that they paid the loan off, which takes it off our balance sheet. So there's a huge amount of liquidity issue going on at banks, where we can only lend the amount of money we have on deposit, right? So if you put this program in place and mandate that banks make all of these loans, well, they can only make many loans as they have deposits. So that's a big issue, right? So right now, there's a couple of tools that the Treasury is putting together to allow banks to, one of them would be probably look like somewhat like a line of credit from the Treasury, so the bank can draw on that line of credit to fund these loans, or maybe a combination. They may pre-fund some of the forgiveness amount to the bank so that they can lend the money out, right? So you've got a couple of things going on that are causing banks to sort of having to hit the pause button. One of them is they're both capacity issues. One of them is a capacity issue with regard to human capital, and the human capital just being able to chug through all these loans. The other is a capacity issue in regard to the dollars that we have to lend out. So both of those are being addressed, but they're going to take a little bit of time. But I understand it's very hard to feel like you don't have your application in. I completely understand. It's not a very good place to be, I would imagine. So anyway, and then again, just know that everybody's working like crazy to make this happen. So that's kind of the overview I wanted to put out there in regard to this whole thing.
So, Mike, maybe just a follow-up to somebody out there who is attempting to take the chill pill or whatever you're saying as far as take the time out. Are you saying it's a qualified borrower, if we're looking for the PPP loan, there's no chance that they will run out, right? That we're going to run out of money. So even somebody who's got they've got a strong enough balance sheet. I'm thinking of a couple of people in particular. Look, I can weather 60 days, but I don't know if I can weather a year.
Right.
I'm going to get this grant, if you will. I want to make sure I'm going to get my, my 60 days, whatever it is, 2.5 months worth of payroll. It's too big of an opportunity to not take that gift. Is
Yes.
100% going to get it? It may not be through 5-star because you guys are hitting pause at the end of the day. But look, you get in line with your bank. If they're an SBA lender, it will happen, and it'll happen in its own good sweet time. But it will happen.
Yeah. So I guess what I'm trying to say is that if you're not already in line, you need to go get in line. There's no doubt about that, right? And you need to find a lender who, if your bank isn't lending because they're not lending at all, so therefore you're not a customer of theirs, and then you go to another bank and they're not accepting new customers, so you're kind of in a lurch. I did just look up on Yahoo. Actually, I think it's Yahoo Finance. There's a whole list of all the banks that are participating. And I would suggest maybe looking at some of the non-banks. And I just very quickly looked, there's a Capital One credit card that is doing this. And I think you have to have a Capital One credit card, but I think a lot of people do. And then there was another bank, or what was it? Harvest Small Business Finance, right? So it's a non-bank participant. And there's other non-bank participants. So obviously they aren't going to have, a lot of those aren't going to have you as a client, but they're targeting that. They're targeting non-banking customers, right? So I would suggest going online and looking at the list of PPP lenders and finding those that are non-banks and maybe looking at, I think somebody said that Cabbage is also doing this. Now I do not endorse Cabbage, but I don't know what that process looks like. But I think there's probably some other lenders out there that are like that.
Hey, my technical question on that, there was actually one of our attendees asked this, guidance on applying to multiple banks, as long as one gets approved, or, that bank to get approved has to check with the SBA and make sure that business hasn't been previously approved. Are there any disadvantages of submitting multiple applications?
Like I told people, is you can do that, but you got to know that whatever bank you don't go to is going to hate you. So as long as you're okay with those hating you, then, I guess so. But I'm not in for that, because that's just creating a big bunch of work, and that's taken away from other people. And we're allocating dollars based on what's in our pipeline. We're going to cut it off. And if you're going to go out somewhere else, then we could have made that money or made that loan to somebody else. So it's kind of not cool. So as a matter of fact, it's really not cool.
And thanks to Laura Good. She always has her finger on the pulse of information. She's put in the chat both the link to check for lenders, as well as SBDC recommended Smart Biz Loans today, as well as Lendistry. So there's some resources in chat that everyone can reference. Thank you, Laura.
Thank you, Laura.
So go to kind of like to kind of summarize here, go to the bank that you have now, whether you be, or go to a place where you have a credit card or something, an existing relationship, because that way you're not you'll bypass some of the regulatory things that go with the new customer. They already know who you are and so on. Okay. How soon do you think we'll get, okay, so somebody's in the pipeline with you or one of the other banks, and they're like, walk me through the estimated time before I get my money.
Yeah, thank you.
Commitment level, just like
that's the big question, right? Yeah. So right now we're grinding through a bunch of loan apps to validate basically the information which we receive from our customers, and that's a process. But then we have found that the kind of the bottleneck is the actual SBA authorization number. So every single one of these loans has to be entered into what they call E-Tran, and they got to get the E-Tran number, which is it has to be entered into the SBA system. It's extraordinarily fine in the items that are required to get an E-Tran number. So you can't have anything missing in the SBA system, otherwise you can't get a number. And so there's a lot of items that need to be included, which not everybody's providing up front, right? Because it was like a mass like, you know, the Oklahoma Sooners grab your land, right? It's like everybody's running for the pot of gold, and we didn't get everything up front. So we're all kind of having to go back and try and get those so seemingly minor details on deals so that we can get an E-Tran number. But once you get that, then we can go to loan docs, and we've funded $5 million+ already. I don't know how many loans that is, quite a few, but every day we're getting a little bit better at that. And you know, as the days progress and weeks progress, we'll end up funding all of the 200 million, but it's going to take a little while.
So I got my E-Tran number. That takes some amount of time, maybe 2 days to a week, depending on whether you got whether your CPA got you all the information correctly and so on. So, okay, got my E-Tran number. That's like the golden ticket as I would view it, because that means you're in. The bank then from there receives some sort of commitment from SBA. And then from there, you guys are just processing the loan. The money comes out.
That's right. Now from there, what we do is once we have that, we're creating the loan docs, and we're sending them to our customers electronically via secure email, and then having them electronically sign those loan docs. So there's no wet signature on any of this stuff. And then as soon as we get it back, we fund the loan. So that's kind of the process. That part's easy, actually. That's quick.
Then when you fund the loan, do you put it in like a separate specialized bank account, or does it go, do you write me a check? How's that work?
Yeah, thank you for asking that question. That's been a big question. And we have highly suggested that everybody have a segregated account for this money, because you're going to have to go back at the end of this 8-week period and be able to really document and prove how you spent the money for it to be forgiven. And it has to be spent on wages, utility, and rent. Those are the three things, really. And if you have a mortgage interest. But you're going to have to really show that. So if you can have your account segregated out, all the money coming and going out of that one particular account, it's going to make life a lot easier for you on the back end of this thing.
And when does that clock start? When I get my money in my account, or is it when I get my golden ticket?
Sure. The money, it starts when you get your money in the account, and that is the beginning of your 8-week period where you have to spend that money. And there's a little bit of confusion around the June 30th timeline too, because some people are thinking that the money has to be spent by June 30th, but that's not the case. The program runs through June 30th, but if you got your loan on May 15th or June 15th, you still have 8 weeks to spend the money. All right.
Okay. Okay. Very helpful. And one thing that I'll back up a little bit out of so we expect to get the money then, once you get the golden ticket, a week or two later. So maybe a total of on average 3 weeks is what you kind of.
That's probably about right. That would be a good guess.
Okay.
Yeah.
And then each bank's going to be different. That's where you guys are at right now. Some big bank might be slower or faster. We have no idea.
They could be faster for that matter. Yeah.
Okay. Now getting into this, a couple of things that have been maybe needed a slight bit of clarification. What if it's a company that hasn't been around, right? It was like, was it 2019 earnings? Was it the trailing 12 months? What if I've only been in business 6 months? How do I get those numbers?
There's an exception to everything, I'll tell you. So, and that's again one of the reasons why it's hard that underwriting process and review process becomes the cumbersome part of this thing too, because there's a lot of exceptions to the general rule, which is, the rule is that you're looking back to 2019 and you're looking at the average monthly payroll cost during that calendar year. And then you're comparing that to what you think you're going to be using in 2 months in the future, right? In the coming 2 months. So you may have increased your salary because you gave everybody a raise at the end of the year, or you bought a company throughout the year in 2019, or you added employees, or you lost employees, or you had a high spike in sales or whatever. But whatever happened, it skewed the average amount in 2019 to be either higher or lower, generally higher, it seems, in my experience so far, at the end of 2019 and into 2020. So what I've asked everyone to do is say, okay, that's all fine, but give me the 2019 average payroll cost, average, right? Just that's fine. And then justify what it is in 2020. I mean, justification being some of those examples I just mentioned, and then having the documentation to prove, okay, yeah, I hired these 3 other people and I paid them X amount of money, therefore my payroll cost is now X. So I'm looking at the average monthly historically, and then I add to that the additional expense, payroll expense I've had since then, if
Oh,
that makes
okay.
sense. Incremental additional payroll expense.
Okay, very interesting. So then I get the money in my account and I've got to spend that amount of money, at least 2 months worth of wages and wage associated expenses. I have to spend all of that on wages and wage associated expenses. And then, but I get 2.5 months worth of money in there. So that extra half month I can spend on utilities or rent, but not landscaping. I mean, I'm really limited on where I could.
That's right. So the general rule of thumb is 75% to wages and 25% to utilities and rent, right? So what we have come across is a lot of instances in which the rent and utilities do not equal or don't come up to 25% of the dollar amount of the total dollar amount, eligible amount, right? So you're going to end up by definition having a lump of money at the end of the day, if you spend it correctly, that you're not going to be able to utilize.
What about a restaurant that made a quick decision to reduce staff and they've sort of, they're trying to survive and they want to do the PPP loan, but, oh, shoot, I've already cut my wages by 50, 60%. I've got to rehire them back now in this 8-week period and make sure I pay them enough to sort of offset. Otherwise,
Yep.
I get none of it forgiven, or do I get a piece of it forgiven, or am I screwed?
You don't get any, well, you get a piece, whatever you spent on payroll, you would be forgiven, but the rest would not be. And that is what we're trying to stay away from. And it's really the intent of this whole program is, like I've said many times, is to keep these people out of the unemployment line. So really, as a business owner, in a way, you are the unemployment line, because you're spending this money on payroll for the purpose of keeping them employed, even though your business is closed, right? So I've had a lot of companies, say, I'm going to make projects. I'm going to, I'll find something for them to do, but I'm going to make sure that they're doing something, right? It may not be exactly, it probably won't be what they were hired for originally, but at the end of the day, the point of this is to keep them out of the unemployment line, and they're making more money that way. But the real reason for that, though, is because, in theory, who knows, but once we get out to the other side, that you as a business already have your employee base still with you, and you don't have to go out and try to rehire a bunch of people and try to get started again. And instead, you're able to you've already got everyone employed, and you're able to kind of hit the ground running a little faster than you would otherwise.
So here's just kind of a nuanced question. Let's say I already did that. Whoops, I made that decision. I was, I was quick to the trigger on removing some employees.
That's
I want
fine.
to rehire them back in 7 weeks. Can I just write them a signing bonus for 7 weeks worth of pay? That way they get the money, and maybe I prepay for their next few months worth of wages.
Is this for the 2-month period, you mean?
Yeah, so if you're approaching the end of your 2 month and you're back, you're reopening your restaurant, and you're like, okay, shoot, I've applied for for all this. Now I'm just going to write them I'm going to do some signing bonuses.
Well, I hadn't thought about that one, Mark, but I guess it's possible.
I'm just looking for the
There's probably all kinds of scenarios I don't want to hear about.
What do you expect in terms of like scrutiny on that forgiveness? I guess that's where my point is. It's like, what kind of scrutiny is there going to be on the forgiveness? Is that you, or do I have somebody from higher up in the universe here scrutinizing my stuff?
Yeah. So going back to keeping everything segregated in a separate account is one part of helping with that scrutiny. But yeah, that's a big question as to whether we as a bank are going to have to be the ones that are the eyes and be the scrutinizer on behalf of the SBA. Or is it going to be a self-reported thing? Or is it the SBA is going to come in and ask you for documentation? Nobody really knows the answer to that yet. I would suspect that they're going to require the bank to look at all the documentation and ensure that what has been spent appropriately, and therefore will then submit a request for forgiveness of that amount.
So
that would be my guess.
That's not clear yet then. We're not clear yet on that forgiveness I guess,
Like who does it?
justification.
Who does it? What's the rectal exam going to look like? I think is what you're asking.
Okay. Hey, I just thought, I've thought about different angles. I won't bring them up on this call because it sounds like it's not clear yet, but different angles to try to take advantage, not illegally take advantage of this, but make sure I keep my company afloat and maximize the grant that I get.
Right.
So, okay, now, and I'm maybe bouncing around a little bit. There are a number of people in our universe. They're solopreneurs or subcontractors. They're 1099 type people, and they can't apply yet either. We've heard that that's going to change. I guess maybe Friday. Is that an area where you're working? Well, you're kind of running in those circles somewhat.
Well, I think in terms of the 1099 thing, I just wanted to address that because the last time I was on this podcast, I was explicit about the ability for businesses to include 1099 expense as part of their payroll expense. And that was explicit at the time, but that is an example of something that's completely changed since then. So that is no longer.
So if you're a 1099er, you got to go get your own.
That's it.
Oh, yeah. So that's clear now. I think most people are aware. It's amazing how many experts really are on this subject. You are the expert here in Sacramento, but there's a lot of people that have gained a great understanding. That's why when I look at the people that are on this list, a lot of the leaders of the Sacramento entrepreneurial ecosystem are on the call. So we're going to end up spreading the message, and that's kind of how we're learning right now. You turn on CNBC, you talk to other people who have gone through it. That's kind of the thing. So, Rick, are there any other questions? I mean, I at some point I want to make sure we include the EIDL as well, but I think we should exhaust the PPP and make sure every stone is unturned in terms of asking Mike for information on this.
Yeah. So just going back to your independent contractor question, Mike, do you know what the process will be for that once it opens up? So there's word that independent contractors or sole proprietors can't apply until Friday. Will they apply with banks? Is there another process for their PPP access?
My understanding is that you would apply in the same way that everyone else has applied, and that's right to your bank. And you're doing the same process. It's just, you're a single proprietor.
Okay.
Actually, it should be an easier exercise because it is just one person, right? So you're not having to worry about multiple people with excess of $100,000 in annual earnings and excluding the amount above that. If you're a 1099 who's making $150, it's pretty easy to exclude the 50 grand and include the 100. So it makes it probably a little simpler.
Right. The PPP loans that you're seeing approved by the SBA, any sense of the SBA softening their underwriting and due diligence? Just kind of what are you seeing with the applications that are approved?
No, I don't. I think that when it comes to an SBA loan, this is pretty soft. There's no information around the personal guarantee or collateral. Those are the two biggest things that we have to go through. So, and there's not a real, there's no review of the financial statements either. So I would tell you that, the things we're looking for are turn that off. The things we're looking for are, the payroll cost in 2019, the payroll cost in 2020, and what's your estimated payroll cost in the following 2 months. And so that has nothing to do with how much money did you make or not make last year. It's not a financial question. So I'd say it's not that difficult today.
And just to clarify that, because you mentioned this before, but originally there was some guidance on what to take your payroll average from, meaning, it was, I think, originally March 2019 to March 2020. You're asking for the average for 2019, and then what is your 2020 payroll? That's what you're asking?
Yeah. So there's a form, and it seems I had never heard of this form until this point, but it seems that everybody has it, which is a form 940. It's the annual tax form that you submit to the IRS that says how much your payroll was for the calendar year, in this case 2019. That is filed by January 31st of 2020. So 99% of our people have had that, which I was surprised at, which makes it a lot easier for us, because all we have to do is go back and look at that and see what your numbers were. So, but in terms of that, it goes again. That's historical information, and then going forward, you gotta, if there's exceptions to the average amount of what you're going to pay in the future, then you have to document that. And you added employees, you gave raises, you hired whatever, you bought another company, kind of stuff. Those are the questions.
Okay.
If that makes sense.
Yeah. And then if there is if a percentage of the loan that is not forgivable, that transfers to a regular loan, an SBA loan at a 0.5%. Help us understand that.
Yeah, that changed a couple times too. First it was 4%, then it was 0.5%, now it's 1%.
Okay.
So it's a 1% rate for a 2-year term.
Right. Perfect. Okay.
Okay, so Alyssa, feel free to jump in here too. So Alyssa White is one of our in-house CPAs, used to be Big Four. Now she's gone small business, hanging out with Andy Wood. You're seeing stuff in the trenches, Alyssa, on PPP. Do you have any other clarifying questions for Mike? What are you seeing?
It's been an interesting process for sure. We're so honored to have Mike and 5-Star as part of the team, but like Mike said, banks are taking their current customers. So we've been dealing with many banks through this. And I think the thing that has been quite interesting is how the application process and requirements are a little bit different across the board. They're all getting to the same answer, but what they're requesting, how they're requesting the documents, what forms they want, it's just been different. And so I think there's been a lot of challenges for business owners because they might be hearing, a request list from one bank and then their bank's doing it a little differently. So we're just trying to help them through that process. I think the other thing too is there's just been such a big hang up between, the differences between the various funding options that are out there right now. People are getting confused. Wait, do I apply for this one on the SBA.gov website? Oh no, that's the disaster loan. Okay, I need to go to my bank for the PPP. And so it's been more of just like educating and helping business owners determine the right decisions. And then also we've been playing a lot in the calculation space for the employee retention credit, which is another part of this phase 3, that if you can't get the Paycheck Protection Program, or maybe you're not in a position to need it, that there's this other option. And so doing some scenario planning on which one's better. So for us, it's been a lot of just clarifying and, really like action planning out what's the best choice for your business and helping them get through that process.
Yeah. There's a few people in the audience that are they're either venture capitalists or they're venture-backed companies. I know that there's been some recent clarification. I can't remember if it was clear last time. I've been talking about this on a daily basis, Mike, but just making sure if there's anybody that's coming in that hasn't maybe been on our latest podcast. There's been some question on how does it work if I'm a venture-backed company, and the clarification has been that that's fine as long as there's not excessive governance and control into your agreements that would kind of by default bring in the rest of the venture portfolio. So have you ran into that at all, Mike? Or Alyssa, have either one of you guys dealing with that?
Well, what you just described is what I'm trying to abide by, which is you can have a venture investment, but as long as that venture fund doesn't have control of your company, and that can be, you can have a controlling interest of 10% or 60%, it really doesn't matter. If they have a controlling interest in your company, then that would disqualify you. I do think that if you have a venture firm that is in excess of 50%, that might be by definition, their ability to dictate what goes on. So I think that would
looking to approve this stuff, Mike. Let's say somebody owns 19%. I'm under that 20%. I do not have control, but let's say I've got 3 out of the 5 board seats, right? Or I've got the preferred shares are getting certain decision-making rights. Are you having to read through agreements like that?
Yeah, I think that is what it comes down to, Mark, is that in the case like you just described, they have a controlling interest in that company. So the company that you're lending money to isn't really the company that you're lending money to. It's the controlling interest, which is the venture firm, which means that venture firm gets pulled into this whole thing. And that's what you're looking at. That's my understanding. Maybe you have a different take on that, Alyssa.
Well, I mimic everything that you're saying. That's what we've been reading and seeing, and I think that's what most banks are doing too.
Okay.
Okay, cool. And I know 501c3s, right? Nonprofits are eligible as well. So there's been that question. Any other questions on the PPP that are surfacing from our audience, Rick?
Just clarifying, there's no collateral required for the PPP loan, correct?
That's correct.
Yeah.
No collateral, no personal guarantees. Go ahead.
Correct.
Yes, and then just to follow up on that question, because there is a personal guarantee component on the EIDL loan for amounts over $200,000. We have yet to see that come into play because the SBA has not given out any approvals yet of any amount, but they are requiring personal guarantees for that amount at this time.
Huh.
Okay, so let's walk through the decision tree. So Alyssa, you and I have taken sort of the thought of like, okay, I have this situation. When do I go for the PPP? And it's virtually always, right? If you've been affected and you have less than 500 employees and you're going to retain the employees and so on, you're going to use it for all the purposes we're talking about, you got to go for the PPP. When do you decide to go for the disaster loan opportunities? How do you make these calls in terms of just rationalizing the decision?
So the conversations that we've been having with people start off with, how have you been affected by COVID-19? What is your run rate on your current cash? And if you don't know, we help you get there. And then what do you need money for? That's the first part of the question. Do you need money because you need to pay your people? Okay, well then obviously we immediately are going to start talking about the Paycheck Protection Program. If you need money because you're still open on your online shop and you're the one managing all the orders, you don't have payroll, but you don't have enough cash to buy, your merchandise for resale. Okay, well, the PPP is not going to be an option for you then because it's not going to be forgiven. So at that point, take advantage of the disaster loan. It's a great loan, a low interest rate. It's 3.75 for for-profit companies. And that's a great loan. So that's the first decision, right? What do you need money for? And then let's decide from there what are the right choices. And then also, I think a lot of people have been hung up on, it's one or the other. And I think there's a lot of confusion on that at the forefront of this. But now you can take advantage of both the disaster loan and the Paycheck Protection Program, provided that you don't use them for the same fund. So, hey, maybe I do have a need to keep payroll going. So yeah, I get the Paycheck Protection Program, but I also need working capital to continue to, pay for a variety of other things. Maybe it is you're paying for your landscaper, but you're paying for raw materials to keep manufacturing going and you're trying to boost marketing right now. And so that's where the disaster loan could come in and help with that.
So if I go the disaster loan, I'm dealing directly with the SBA though. I'm not going to Mike Rizzo or a bank.
That's right. So the disaster loan you file for on the SBA.gov website, and we can help with that too. We've been doing many of those. The thing that's I wouldn't say concerning, but interesting right now is, everyone's waiting on their applications to be approved. You get a little number at the end and it's just a sit and wait. And everyone that we have helped with, which has been many, are all still waiting. Wow. And you can't get through, you can't get information. They're saying anywhere from 3 to 6 weeks. So there's a lot of, hesitation of, okay, I'm in an economic injury disaster right now. I need funds and I don't really have a clear idea of when you're going to get it. And so that's kind of a challenge. I've been mimicking what Mike has been saying to all of our clients: be patient with your bankers and be patient with the SBA, because no matter the amount of calls is going to help this process go faster. Everyone's overwhelmed right now. So, and the other thing on the disaster loan thing, the application asks for your 2019 revenue and your 2019 cost of goods sold. It does not ask for operating expenses, which is very interesting because a lot of people, they're like, well, shoot, I don't really have cost of goods sold. How are they determining this? And so we're encouraging them to consider some operating expenses up to cost of goods sold.
How about from an accounting standpoint? I'm thinking, like, what are you advising clients on, Mike or Alyssa? I've heard that these loans, when they become a grant, on the back to the PPP, right? They become a grant. That's going in as I consider paid in capital, because I heard that those things it's not a hit to income.
it's technically forgivable and a non-taxable item. How that's going to be reported, I'm guessing based on my, previous tenure in the tax world. Yeah, it's been a long time since I've been in the tax world, but my expectation is that they're going to turn it into what's called an M1 adjustment, a book tax difference. Mm-hmm. So it would be an income item on your profit and loss for book purposes, for your internal accounting purposes, but on the tax return, it will be pulled off as a book tax adjustment. They haven't come out with the regulations on what that'll look like. That's what I'm anticipating they're going to do, but it's hard to speak, preemptively on that.
Cool. All right, Rick, you're moderating our chat room. If there is any dialogue going on in there, I want to make sure we exhaust all the questions. Mike, how many hours a week are you working? Or I should say a day. How many hours a day right now? Like a day is like 3 days. It's like.
I don't know what day it is, Mark. Yeah. I really don't.
So,
no, we're all doing like 12 to 16, 17 hours a day.
Your time is precious. I want to make sure we don't waste any of it. So, Rick, I want to make sure we got this crack at Mike that we don't waste this opportunity. You're on mute, buddy.
I am.
All right.
Mike is. Excuse me, Rick.
Yeah, we've been doing a good job answering all the questions. There were more questions. I think you opened up Pandora's box with the payroll advance ideas and bonus ideas, Mark. So we are getting more
where
questions.
Those came from.
We're going to have to do a separate webinar with Mark Haney on creative ways to use your PPP loan.
There'll be confidential conversations.
I will not be invited to that.
There was a question about realtors being that they're sole proprietors. So I'm assuming there's no guidance on that other than they're sole proprietor and they have to follow that process starting Friday, right? Yeah.
I did have a quick thing on that I wanted to ask you, Mike, about, in the Paycheck Protection fact sheet, it says entities and sole props can file as of last Friday, but then self-employed and independent contractors can start this Friday. And so how are they delineating between a sole prop and a self-employed? Is it purely because me as a self-employed individual, like I'm a gig worker, maybe I drive around for Uber, whereas me as, Alyssa's bookkeeping, that would make me like a sole prop? Like, how do you differentiate between, we haven't heard from the banks how they're making that difference.
You know what? I haven't run into that yet, I guess is the answer. The couple that I've done have been sole props and they give themselves W-2 earnings each year. So maybe that's how it works. It's because this is based on your W-2, right? So if you have W-2, then you'd be considered a sole prop and you have, you can apply for PPP today. If you're 1099, you're not getting a W-2. So therefore you'd have to go on Friday. And I don't know what that's going to look, how the underwriting would that be.
What about the guy with 4 or 5 sole proprietorships, right? He's got a handful he's got his irons in a lot of fire. He makes $100,000 here, $200,000 there. He's got a business with employees. Can he or she go after a whole bunch of little PPPs?
Yeah, you could. I've done that. It's by tax ID number. So by business. So
right, but the sole prop, if we're working on, or like a 1099 guy, he's working off of his social security number.
That's right.
So
it's per social security number, per tax ID number.
So it'd be like $100,000 per social security number then.
Yes, exactly. Exactly.
Okay, that's what I thought.
There were some questions about microloans and some of the loan programs that we're seeing from cities. And so I know, Mike, you're not directly involved with those, but both Mike and Alyssa, I'm interested in what you're seeing about those processes, application process, how they're affecting financial planning, et cetera.
Well, I know that, go ahead, Alyssa. If you
go ahead.
I was going to say the Sacramento, gave away their $1 million to their 100. I don't know how many. I think it was about 100 companies, and they're very, very small dollars. A lot of them like $5,000 at a shot. So I'm personally not sure how that makes a difference. Elk Grove is doing the same. I think I read yesterday, as well as Roseville is doing the same thing. $1 million pot of money to be given among a whole bunch of people. I think Sacramento had something like 1,300 applicants they had a lot more applicants, but there were 1,300 that were full applications, right? Viable. They only gave away 100 to 100 people. So I don't know. I don't know if it makes a big impact.
We're not seeing a big impact on those things either. We've had some clients apply for them. There's a lot of stuff out there, and it's hard for any one of us to know, by the back of our hands, oh yeah, there's this small grant out of this county. So, part of it's just researching and seeing what's out there. The other thing we're suggesting to people too, and I hate suggesting this as a CPA, but for people that need cash now and are waiting on, they've exhausted all of their options, right? And they've already asked friends and family, we're like, hey, where else do you have money? Do you have a credit card that has cash advance option that you can pull out, a convenience check to yourself for, a week, right? As you're waiting for this stuff. I hate suggesting that. That's not what I should be suggesting as a CPA, but, to keep the lights on and, in this holding pattern when there's nothing else, we're just suggesting any options. We look at everything exhaustively to see how we can keep them running while they're waiting on these more, advantageous options.
I guess, just so that we, keep track of your time a little bit, make sure we are respectful. The first thing you said when you got on was, I think the main thing we have to do is keep calm. And as we know, you're going to make better decisions overall when you're in a more calm state of mind. Any other just kind of closing thoughts or other thoughts that we should be taking into consideration at this time?
Yeah. Maybe, keeping calm and know that if you're in the queue, you more than likely will get money. Even if you haven't heard back from your bank, that they're busily working on your deal and everyone else's. That pot of money is growing, and I don't see it being exhausted like people think it's going to be. There's a sense that it's going to be gone overnight kind of thing, and that is not happening at all. There's the fact that Wells Fargo is opening up again is a huge thing, because they have a lot of small business clients. That's huge. And then again, looking at some of those, if you're not already, if you're a customer of a bank that's not offering PPP, then I would look at, again, some of those non-bank lenders, a credit card company, the Capital One. I thought American Express was going to be in there also, and look to that.
The other thing too that just came to mind, a lot of people are with Bank of America, and initially Bank of America said, if we don't have a lending facility with you, it's no. And then I think they relaxed that to say, if you have an account there, it can be yes. So they've
well, that's good to hear. Yeah, that's good to hear, because I think a lot of banks had that question at the very beginning as to whether they were going to do this for lending customers only. And my thought was, well, if you have a business and you only have a deposit account with the bank, that actually could be a really strong business. You didn't even need lending, so why are they being excluded? So I'm glad to hear that they're opening that up.
Yeah, one of our portfolio companies had 7 figures in a Bank of America, no loan. They're
right,
strong, and they got denied, and it was like, what?
Yeah, it makes no sense.
Yeah. Okay, Rick, anything else you want to say as we sort of close out, or Alyssa? Rick, we got you on mute.
Yep, sorry. Thanks again to Mike and 5 Star Bank. They've been a tremendous partner throughout all of this, and really stepped up. I never thought I would say that a banker was a hero, but I think you're doing heroic work in this new world order. So thank you so much, Mike. Laura Good, we're going to start needing to invite her as a panelist, because she is just a wealth of information. And so she posted this site in the chat for startups about COVID-19 resources, including some of the funding and loan options here. So I'd encourage you to check that out. And then, thank you for all the attendees. This webinar, like all of our webinars, you'll be able to find recorded. We've got our daily Haney Biz Huddle daily attack plan. So don't be in this alone. Join our community and connect with us so that we can help you. Especially now, we're talking a lot about your inner circle and finding those trusted advisors that you need to get through this. So please share this information or join us. And then our crisis support. So you were just able to get a taste of Alyssa and team today about their expertise and how they're helping companies. So please, we encourage you to share that information. If you're interested in being a referral source, please reach out to us. You can reach out to me, Rick at haneybiz.com, or go to our website, haneybiz.com, and fill out a contact form. So thank you again to everyone, especially Mike, and we'll see you next time.
Thanks, Mike.
Thank you.
Bye.
Thank you, Alyssa. Nice job.
Thank you.
And you too, Mark.
You too, Mike. Thanks.
Thanks for watching today's show. My goal for every episode is that you find a takeaway, something tangible you can use in your business today. And if you have a comment about a favorite takeaway, feel free to put it in the box below. And if you have a topic that you'd like me to bring up on the show, don't forget to let me know. And also, don't forget to subscribe to our YouTube channel if you want to learn more about entrepreneurship. Because at Haney Biz, we are always by your side.